All right, everyone. Let's get a timely start with this session because we have a lot to discuss the next 90 minutes. A very warm welcome to everyone out there. Good morning, good afternoon, good evening, wherever you tune in from. Let's first get, let's say, the details done, and that is the housekeeping. For those who have already watched other sessions, this is a bit redundant. But anyhow, we'll have 90 minutes, including question and answers. You are muted to ensure that we don't get any background noise and have a high quality of sound. I want to very much encourage you to submit questions via the Q&A feature. We'll be picking up some of these questions during the session. So please start asking questions as soon as you want already during the session. The session is being recorded, as all the other sessions are. And if you have any technical issues, please use the chat box to contact the MIN executive team. So please be aware, questions in the Q&A feature, I only see that. So if you post any questions in the chat box related to content, I will not see that. If you have technical issues, use the chat box. All right. My name is Gregor Sahler. I'm working for the GIZ sector program on financial systems development and on the global initiative on access to insurance. Before I joined GIZ, I worked for different financial institutions, mostly on questions around financial inclusion and the financing of micro, small, and medium-sized enterprises. So this was very close to my heart when I started at GIZ to pick that topic out from an insurance angle. MSMEs form the backbone of many economies globally and give rise to economic growth, employment, and innovation. They account for more than 80% of net job origination in developing countries, but at the same time, MSME face a large financing gap in developing countries, which is estimated by the IFC to be approximately $5 trillion, which represents 1.3 times the current level of MSME lending. I think it's quite obvious that the ongoing global COVID crisis has once more highlighted the extreme vulnerability of micro, small, and medium-sized enterprises to exogenous shocks and risks. And at the same time, we have to see that the uptake and use of insurance remains extremely low for this group. For example, in sub-Saharan Africa, it's estimated that less than 2% of all MSMEs have any form of insurance. So it's quite clear that MSMEs are vulnerable and face a range of risks that make them liable to fail, not just impacting the individual owner, but also the employees and the dependents. And as businesses grow and start to employ informal risk coping mechanisms that, for example, micro businesses often fall back to, become increasingly less able to help them deal with these risks. So there is a clear need to support MSMEs to better manage their risks. Thus, the overarching questions we are going to address at today's sessions are the following. Firstly, how can MSMEs be supported to manage their risks more effectively? Do we need to rethink how MSMEs are served with insurance? And also, how can business models serving MSMEs be made to work sustainably? The discussion we're going to have today will be centered around the key findings laid out in the learning note we just finalized. The title of the learning note is Managing Risks More Effectively, Rethinking Insurance for MSMEs. This note is basically launched now, so you can pick the note up from the Mint's website. And Jeremy Gray, one of the speakers, will introduce the background of the note just in a couple of minutes. So Jeremy, since I've already mentioned you, let me now briefly introduce the very distinguished panel we have for this session. So firstly, we have Jeremy Gray. Jeremy leads the resilience team at Cenfri. Cenfri is a think tank based in South Africa. Jeremy's focus is on better understanding how to improve the resilience of both individuals and enterprises across the developing world, and on working with both the public and private sector to achieve this. Jeremy has a particular interest in the role of policymakers and regulators to improve the role of the financial sector to meet individuals' financial needs and how insurance can deliver better solutions to SMEs to more effectively build their resilience. Hi, Jeremy. Secondly, we have Monirul Hoque. Monirul is the planning manager for the largest microinsurance product under BRAC, which is covering approximately 10 million clients in Bangladesh. Monirul has been working on this project from inception. Besides microinsurance, he has also worked on topics such as digital finance, financial education, and product development. And last but certainly not least, we have Siani Malama. Siani is the head of business development and inclusive insurance at Hollard, Zambia. His role has been centered around the development and implementation of innovative insurance solutions for new customer segments, and currently focusing on small-scale farmers and micro, small, and medium-sized businesses. Siani has been with the Hollard Group since 2010. Before we are starting to have a brief look at the note, as I just have promised, we would now like to actually learn a bit about you, the audience. So we have introduced ourselves, or I have introduced the speakers. So therefore, we have prepared a poll. Asia, can you please launch the poll? And instead of just asking you for which kind of institution you work for, we would be interested to hear about your motivation. Why are you attending this session right now? And your options for answers range between I'm actively working on insurance or risk management for MSMEs, up to I'm attending all the conference sessions, even those on MSMEs. So please take 10-15 seconds to choose one of these options, and then I think we'll have a better picture about who's listening today. All right, let's give it another 3 seconds. Okay, Asia, can you show us the results? Okay, I think it's a relatively clear picture, much less contested than the US elections right now, and the results are also in much quicker. So I think the majority is either actively working on risk management and insurance for MSMEs, or is planning to work. And then I think we have a pretty even split about people that are interested on the topic but haven't been actively involved yet. All right, thank you. So this is now time to hand the words over to Jeremy, who will briefly introduce the learning note I've mentioned.
Thanks, Gregor. I'll be very brief, but just so everyone on the call is aware, We posted the link to the full note in the chat, so you can click on that to download it if you're interested. The background for this note is it was the outcome of a best practice working group that was hosted by the Microinsurance Network, by the MIN, over the course of this year. Gregor and I had the privilege of co-chairing that working group. And as a result, or drawing from the findings from the discussions we had within that working group, we've put together this learning note, which really aims to capture the great insights that we learned over the course of the year from the great group of people that we had, which included representatives from development organizations, a number of insurers who are already doing quite interesting things with SMEs, and many of them I think are in the audience and indeed on the panel as well. So Gregor, if you just click through, what we've outlined in the note is to start by unpacking what are the key challenges for insurers to serve SMEs with insurance. But then the main focus of the note is really in section 3, where we unpack what the key considerations and opportunities are to change the status quo, because I think it's not a controversial statement to say that MSME insurance is, or SMEs are vastly underserved by insurance, and that there is huge opportunity for growth, but that insurers have struggled to tap into this key target market. So in section 3, you really unpack some of the key facets or considerations that insurers or insurance providers and other players who are looking at filling in that gap need to consider in developing products that will actually work for SMEs. So first, by understanding who the SMEs are, then moving from being simply an insurance provider to thinking more holistically about being a risk management partner. And then lastly, the importance of partnering with key aggregators with aligned incentives. And I think we'll delve into all of these themes into quite a lot more detail in the rest of this discussion. So I think that's all I'll say at this stage on the note, but we're really excited. Today, it's been published literally within the last couple of hours. So anyone interested, please go to that link on the MIN website and download. Thanks, Gregor.
Thank you very much, Jeremy. So as Jeremy and I have mentioned, the discussion we're going to have during the session is actually structured along this learning note. And as you can see, the first, basically the first chapter after the introduction is about the challenges. So let's have a look at the challenges. We identified 7 main challenges in that note, and I read them out for you because afterwards it's up to you again to make some decisions in the poll. Though the first challenge we have is inadequate risk management strategies. This basically means MSMEs are vulnerable to personal and business related risks but lack adequate risk management strategies. We do have, as a second challenge, the thing that there is a rapidly changing risk management needs. Again, I think COVID-19 has demonstrated that as a more than we would have hoped for. So risk perceptions and thus risk management needs can change rapidly. For example, when a hazard materializes that was previously disregarded or maybe underestimated. Thirdly, we have a lack of awareness of insurance, though this is basically the demand side, in this case MSMEs, who often suffer from a lack of knowledge on how insurance works, what risk they should seek insurance coverage for. And but also on the other hand, we have the insurers, and the insurers lack of knowledge about MSMEs. So insurers have little experience in catering to the needs of MSMEs. That would be the first challenge we have identified. Fifth, we have high heterogeneity, which means it is challenging to strike the right balance between standardized and tailor-made products. I think we will come back to that in more detail later. Of course, MSMEs are difficult to reach. Insurers therefore must find new ways of aggregating MSMEs. And lastly, we identified regulatory barriers. For example, regulatory restrictions can hold back insurers to tap into the MSME markets, such as restrictions on distribution channels or on bundling coverage. So what we would like you as audience to do now in the next poll we have. So we introduced you to all these challenges, and Asia is now launching a second poll, and you can actually choose two out of these 7 challenges that you think are most significant. And don't take this choice lightly, because it will actually directly influence our discussion in the next couple of minutes. So I'll give you a minute to think about that carefully and read through the challenges again. All right. Let's give it 3 more seconds. All right, Asia, show us the results. Okay. So we have inadequate risk management strategies, about a quarter. Very similar to difficult to reach, but we definitely have two outliers here, so 2 that make the race, which is lack of awareness of insurance and insurers' lack of knowledge about MSMEs. So this is, I think, quite interesting. I'm not sure if I would have foreseen this result, but yeah, I think it makes for quite a good basis for discussion, and therefore let me point a first question to Jeremy. Firstly, can you explain a bit more about these 2 challenges that have been identified as top challenges? How could these 2 challenges be effectively tackled? Are there maybe even some examples in the learning notes here?
Yeah, so I think it's really interesting that those were the top 2 that came out, and they really speak to 2 sides of the same coin in some aspects. So on the one hand, we are saying that small enterprises are not that aware of insurance and not that effective at fully understanding the risks that they face. On the other hand, we're saying that insurers are not that good at understanding MSMEs and the risks that MSMEs face. So I think it's really interesting that those 2 came up. So on the first one, let's look at lack of awareness of insurance. So I think that what is clear certainly from the research that we've done, and I think complemented by many academic studies, is that us as humans are not particularly good at understanding risk. I think we tend to overstate risks that have happened recently or that are particularly significant in our minds. So saliency and recency bias. And I think probably never been a time in our lives that has been more relevant than right now. And that combined with many other natural human biases means that we aren't that good at understanding and assessing risks. And business owners and people within SMEs are equally vulnerable to those type of biases. So I think understanding the risks that they face is a real challenge for many MSMEs. Understanding risk, assessing risk, modeling risk, and understanding the implications of that risk is quite a specialist skill that is not available internally to most MSMEs. So I think that there's a real case here that MSMEs are not that good at understanding the full scope of risks that they face and the likelihood and implication of those risks manifesting. I think a good example here, for example, is on climate risk, where we found, doing some work in Morocco, for example, that flood risk is a major challenge for many MSMEs in the low-lying coastal areas of Morocco. And insurance products have actually been developed targeted at those MSMEs, but with very limited take-up. In fact, virtually no take-up. And in that case, the question is the insurance product effectively designed for those MSME needs? And that, I think, links to the second challenge that I'll come to in a moment. But there's an aspect here that flood risk is undoubtedly a risk for these MSMEs, but it's not something that is immediately front of mind for them. It happens infrequently every few years, and those are risks that are actually often insurance is best designed to meet those infrequent but significant impact risks, but are also those risks that we're least able to fully understand and be proactive about mitigating against. So I think there is an aspect here about maybe and I would almost frame it more than just lack of awareness of insurance, because there is some lack of awareness of insurance as a tool itself, but also just understanding risk and what the type of coping mechanisms available to SMEs are to deal with that risk. I think on the other side, though, is that insurers really do lack knowledge about SMEs. I think that many of the products that we've designed, and I think I can come back to the same example about the flood risk product, developing a solution for MSMEs means that you need to develop something that is tangible to them and that speaks to what is immediately applicable to their day-to-day realities. And if flood risk is not something that is applicable to their day-to-day realities, then selling a standalone flood risk product is probably not going to lead to great success in selling insurance in that market. And I think that, there is some aspect here of insurers not having invested in understanding MSMEs and the MSME environment, but it's not limited just to insurers, and it's probably unfair to only pick on insurers when you talk about lack of knowledge about MSMEs. There's a crucial lack of data across markets, across the emerging world, on who MSMEs are, what they look like, even how many there are across most markets is information that is impossible to come by. And I think that, and furthermore, if we're thinking about designing insurance products, or in fact any type of financial service, we really need to think about the specific needs and the specific risks that are faced by those MSMEs. So it's not just about high-level information about how many MSMEs there are in the economy and perhaps where they're located. We actually need to understand the different subsets of those SMEs. We need to understand different groups of SMEs with similar needs. So there's a need for real granular information that enables us to segment MSMEs into useful segments or useful groups through which we can design insurance products that are tailored to their specific needs. An MSME working within the tourism sector has fundamentally different risks and fundamentally different needs to an MSME working in the agricultural sector or the manufacturing sector as a random example. And COVID-19 has highlighted that. We've done work, looking again, Morocco is something that's recent in my mind because we're doing work there currently. Just a breakdown of the impact of COVID-19 across different sectors highlights how vastly different the impacts are. I think 85% of SMEs have been adversely affected and I think had to close down in the tourism sector as a result of COVID-19, whereas in the agricultural sector, it's more like 20%. So again, they face different risks, they face different needs. Even when they face the same risk, they manifest quite differently across different sectors. You therefore, as insurers, need granular information that enables you to usefully segment those MSMEs in order to design the products tailored to their specific needs.
Thank you, Jeremy. I think that was a very compassionate speech about these two challenges and how also you can tackle these challenges. I also thought what is totally right, what you mentioned, is that's not just a challenge for insurers. As I mentioned, I worked in financing before, and I did mention the SME financing gap. So while let's say financial institutions in many countries do a good job on serving loans to micro businesses, they are also talking about this funding gap for SMEs. And I think that whole industry started maybe 10, 20 years earlier than the insurance to look into the needs of underserved people. So yeah, and they are still struggling to close that gap. So let me turn to Siani. Siani, Hollard, Zambia has just brought out a product for micro businesses. I think when I say just, I think it's really like 2 weeks ago. How does your experience bringing this product to market relate to the two challenges, to the two top challenges we've been discussing? Or was there maybe even another challenge more challenging to you?
Yeah, no, thanks, Gregor. Yeah, I mean, it's definitely what the poor results indicate is definitely what we found as well prior to launching the recent product. And one thing that that we definitely decided to do is definitely not to have a product that is born out of the boardroom. And I think a lot of insurers, including Hollard, have made those mistakes in the past of taking a boardroom product, and we wonder why the product does not succeed, or why the uptake of the product is very low. We definitely decided to take a different approach before we could even start looking at designing and developing a product. Is we wanted to understand exactly who's our target, how does a SME look like in Zambia, what are the financial challenges that they face within both their personal and their business lives, and really taking a holistic view from a financial perspective, and looking at how can insurance fill in some of those gaps, because what we found is majority of the MSMEs are already making use of some form of risk mitigation mechanism, whether it's formal or informal mechanisms. So from an insurance perspective, or from an insurer perspective, that's what you're actually competing with. You're not competing with another insurer, but you're competing with those informal risk management tools that they trust and that have been using for quite some time. So for us, it was really cardinal to understand those challenges and to make sure that whatever it is that we design, whatever it is that we take to pilot, addresses those pain points that these customer segments are facing. And insurance awareness or lack of awareness is definitely one of the things that we also found. If I narrow it down to the Zambian context, although people are fair with the concept of insurance, mainly which is driven by motor insurance, because motor insurance is mandatory. So the concept of insurance on its own is not too foreign, but it's the understanding of how insurance works. And a lot of people get insurance not because they want to, because they see the benefit of what insurance can provide, but they get insurance because they have to, because it's law. So those dynamics really make it difficult for insurers in trying to address some of the challenges that we find. And this requires, and it really challenges a lot of insurers to invest in consumer and customer education. Definitely, it's not a cheap exercise. It's a costly exercise. You're dealing with a customer segment that the level of financial literacy is quite low. So in terms of how you explain products or how you explain financial inclusion or risk mitigating factors, you definitely have to take off your insurance cap and really put it in a level that they can relate and they can understand. And we found that really by making it simple, making it as easy as possible, that helped a lot of these consumers to actually relate. And it was surprising. What was interesting is majority of the risk mitigating factors they're actually using in some way indirectly. It's actually some form of insurance. They just don't know it, or they don't call it insurance. So one thing that definitely came out is these customers know what risk is. I think they probably have a better understanding of what risk is, or what risk they're facing on a daily basis. And there's a huge need for insurance companies to definitely invest in trying to understand what are the challenges, what are the risks that this customer segment is facing. Taking a corporate product, for example, an existing product, and watering it down and thinking that's going to be a solution, it just doesn't work. We've seen cases after cases where that has not worked. So it definitely does call for innovation. It definitely does cause for investment from insurers in terms of before taking a product out there, to really fully understand the challenges that these customer segments are facing in terms of the solutions that we provide.
Thank you, Siani. Monirul. I think Hollard did not need an introduction to this audience. However, BRAC is not an insurer, and it's also not the typical MFI, I would say. So therefore, before coming to your question, could you briefly explain what BRAC is and what role insurance plays for BRAC?
Okay, thank you, Gregor. So BRAC, as many of you know, is the largest NGO in the world, and microfinance is its largest program. So BRAC Microfinance has been operating from 1973. And we always has been taken a holistic approach to the poverty reduction and sustainable development of our clients. Not just about credit and savings. We are also very focused on other opportunities and the need. We always try to address the need of our clients, financial needs, especially definitely. We also look after the digital financial service approaches, and financial literacy is one of our key priority. And just to share, our insurance product is itself a great example of our management's clients focused approaches and innovative mindset as well. So I can go on and on and about BRAC Microfinance, BRAC itself, but I will be very brief. But I would definitely like to share a link where you can go and check what BRAC Microfinance is all about. That's a small fact sheet, a 3-pager. I will request all of you to check the link. I just shared that in the chat.
Thank you, Monirul. So perfect. So now let's get to the real question for you. Would you have voted for the same 2 challenges? Why or why not?
Well, I absolutely agree with that 2 challenges. As I have been saying, sharing in the best practice group meetings as well. I believe these 2 challenges actually, if we go for solving these 2 major challenges, we can also find the solution for the others. These all are associated, and these 2 challenges, as Jeremy mentioned, is just a twofold of a brook. And while the client do not understand what the risk mitigation strategy they should take, the most important factors that the insurer do not understand them. Yeah. Just to add with Jeremy, if we see in Bangladesh, a flood is a major catastrophic risk they have, and it is like sort of happens every year. While the SMEs are, there are many SMEs, they don't affected by the flood directly, but there is an indirect effect, negative impact and effect in their business and growth. For example, if the farming, or if the farming is affected due to the flood, if the SMEs is related, his business is related to the farming, if not directly his business or his shop, let's say, not affected by that, but due to the disruption in the cultivation can affect him. So it is sometimes I saw based on my experience, they do not understand that indirect risk they have. On the other hand, I mean, I always see that the lack of understanding on the insurer side about not just SME and overall need of the market is the main challenges that we face, especially in Bangladesh as well. What are the, let's say, in case of, what are the financial challenges they are facing, the SMEs, what are their, the risk factors they are facing, which actually disrupting their business, their growth and overall. The insurer have almost no presence, and there are certain presence of insurer in the SME market, but that is basically that is about the life insurance product. They are there are insurance agents in the market with the life insurance product, but there are many other needs, which is non-life needs mainly, that are not getting addressed. So that is something definitely is should be addressed. And just to say, like, if we understand the risk, then we also can understand how to reach them. What are how heterogeneous they are. What are the changing needs they have. So I see this one key element. If we can solve this, we can actually solve the other associated risk that is mentioned, and that what we have discussed and found in our learning notes.
Okay. Thank you, Monirul. I mean, you already touched on something that we are going to discuss actually next, because I'm happy that we spent some time on the challenges, but the gist of this session we actually reserved for the emerging opportunities, and that's where we shift in next. And as Jeremy has explained at the beginning, we basically found 3 emerging opportunities that we want to discuss today at this session. And I think very well connected to some of the comments we have already heard is the first emerging opportunity we found is understanding MSMEs and their risk management needs. And therefore, the first question about that to Jeremy. The title of the learning note is actually Managing Risks More Effectively, Rethinking Insurance for MSMEs. So why exactly do we need to rethink insurance for MSMEs, Jeremy?
Yeah, I mean, I think the kind of the obvious statement is, if you look at how insurance is currently used across the developing world by MSMEs, I think it's probably not unfair to say that insurance has failed to provide resilience to MSMEs to any meaningful extent. I mean, I think the current pandemic again highlights just how few MSMEs actually have insurance, and that for most enterprises in most developing countries, it's simply not considered a viable coping mechanism to deal or mitigate against risks. I think the data that we have suggests that in sub-Saharan Africa, and extrapolated from the countries that we do have some data on, about 2 to 3% of MSMEs have any form of insurance at all. So it's extremely low. So just the fact that we, level of failure of the insurance industry to reach MSMEs suggests that maybe we need to rethink any approach that we're currently doing. I think that, but as we began discussing earlier, and I think you touched on it, Gregor, with your experiences of working with the provision of finance, and Siani mentioned it as well, that if we're thinking about the challenges for insurers to unlock that MSME business case, it really isn't an easy solution. Because on the one hand, when you're serving a corporate client, as an insurer, there is a sufficient business case for you to tailor a product to the specific needs of that large corporate, because the corporate themselves constitutes a sufficiently large business case in order to invest what's required to tailor the product accordingly. If you're serving the retail market, or even the widespread kind of micro level or extremely small business, extremely micro level enterprises, much of their needs are actually more personal insurance in nature. And similar to what we see in microfinance, that actually tends to be somewhat better served by insurance. In between those two is where you find a significant portion of SMEs, and particularly those kind of larger SMEs. So we're thinking here not about your sole traders operating in the markets, but those that are actually enterprises employing at least a couple of people, all the way up to employing even 200, 300 people. And that group of MSMEs is the key drivers of growth across developing countries. But there really aren't that many insurance policies that are designed for them. At best, there's either an attempt to sell retail insurance to those enterprises, or, as Siani mentioned, taking corporate policies and shrinking them. And that really doesn't work. As we discussed in the last question, that you need to understand the specific needs of a specific group of enterprises. And enterprises and the needs and risks that manifest for different enterprises differ quite substantially based on the sector they're in, based on their size, based on their level of skills, based on a number of different parameters that really need to be considered. And so the current approach that we're seeing of largely taking existing policies and trying to adapt them for SMEs is not working. So I think similar to what we went through with microinsurance 20 years ago, we need to actually rather rethink the business model. Almost start from scratch. Maybe that's going too far, but start from scratch to think about what is it that MSMEs actually need? What would they buy? What would they value from us? And can we then design a product or solution that speaks to that? So again, I think starting from that important point that we've all discussed in the last question on how that's the biggest issue or the biggest challenge is understanding MSMEs and understanding what their needs are needs to be the starting point for this, as I think with all target markets. But then I think because of the unique business model challenges that MSMEs create, we probably then, there's a range of different solutions that need to be built on top of that.
Thank you, Jeremy. Turning to Monirul again. Well, let's say one question a bit out of the ordinary here. Last year's conference took place in Bangladesh, and I had the pleasure to attend this conference. And ever since, that's the thing I've been wondering about, and I want to take the chance to ask you now. So Bangladesh, as many of us know, has been on the forefront of the whole microfinance movement. BRAC being one example of MFIs and financial institutions in Bangladesh who actually made quite a difference to many people. So you would think that this makes a very firm foundation for inclusive insurance. However, the inclusive insurance market in Bangladesh seems to be vastly underdeveloped also compared to peer countries. So why is that?
It's totally untapped still. Yeah, thank you. So I absolutely believe that the MFIs have done very good job in terms of financial inclusion, and in terms of inclusive insurance, they can be in the driver's seat as well. So the MFI-led insurance can be the easy and effective steps towards the inclusivity and offer the right solution for them, because the MFIs have put a step in every corner of the country and they know their client very well. So, and there is a very good brand value as well. So in the last year, I believe you also came to know about negativity about insurance in the market. And I strongly believe that this negativity can be replaced by the MFI's trust and brand value that over the time it's been developed. And in this same approach, we have been offering our credit life insurance, where the client actually see BRAC as the driver's seat, and this belief on BRAC and they believe that the claim settlement will be done and the enrollment will be very much proper since BRAC is doing that. So they do not see insurance companies which is working in the background. So this can be done in a good partnership, and if we see if the MFIs can have good insurance partner to run such opportunities. And one challenge I think you also heard in last year, and in Bangladesh particularly, the MFIs are allowed to offer insurance kind of risk management tool for its client, not needed to be a partner with formal insurance companies. But as so far what we have been seeing that it's mostly the credit life that the MFIs are offering. But if we talk about MSME, especially, they do not have only need about their life. They have need for many other non-life protection they need actually. So those are the avenue, those are the opportunity within the barrier or within the limitation of the regulation that currently we have, or insurance companies especially have. They can actually think about that way of, addressing those needs and come up with the solution. And so the question can be like, how much the insurance companies knows these needs again. So back to this, the challenges that how much insurance company need the SMEs clients, because I still believe, like, again, if they understand them, I strongly believe that they can actually come up with a innovative and unique solution. And jointly with MFIs, definitely a strong presence can be done, and the inclusive insurance movement can take pace, a good pace.
Okay, coming back, Monirul, to the segmentation then. How do you actually segment your SMEs or your MSME clients at BRAC? And do you adapt your insurance offerings according to these segmentations, since you are coming, let's say, from a little bit a different perspective than an insurer?
Well, so as a distribution partner, I mean, for SMEs, we have financial evaluation metrics. We have SME schemes, specific schemes for SMEs that alignment with our central bank's schemes as well. And there is a documentation requirement as well. So that is altogether the criteria for selecting who will be the SME client for us. And this is very generic in all the MFIs in Bangladesh. And there is also a loan cap, but that is depends on the client's further evaluation. But these three things, the schemes, the evaluation metrics, and the documentation need is what we need, and how we evaluate whether the client will be falls in SMEs or in micro. But just to add on that, besides this is very traditional approach that's been following for such a long time. BRAC Microfinance is currently also working with F-commerce based SMEs in a very small scale pilot. And this is another growing SME target market, I believe. While we are talking about the traditional approaches, this is another big group that may be out of sight, remains out of sight. And this COVID pandemic is actually creating the opportunity of e-commerce and F-commerce based market. So we also need to check that the options and the opportunities we have that need to be addressed. And I also believe the tech solution, InsurTech solution, is the right option to address those SMEs, that SMEs market.
So basically, you have two baskets at the beginning. One is the micro businesses, and the other one is the SMEs. Did I understand that correctly?
Absolutely.
And then you segment further within these two baskets.
Yes, we have micro and we have SMEs. So theirs have different metrics to identify the clients.
Yeah, I just wanted to clarify that, because what I often see is that people talk about SMEs, and you have to be very careful to see if actually micro businesses are included in that. Also, if you go through research or publications, you have to read the fine print first to see if what are they actually talking about. And I saw that we do have some questions in the chat about informality. We will come to that in a couple of minutes. That also can play a role here. But let me first turn to Siani and bring him to this discussion. So Siani, I mentioned you brought a micro business product to market just like a couple of weeks ago. Can you briefly describe this product, and maybe even more interestingly for this audience, can you explain us a little bit more on the approach you took to understand potential MSME customers?
Sure, Gregor. Yeah, so I mean, the approach that we took, I think as I had alluded earlier, was definitely, we did not want a product that came out of the boardroom. We wanted a product that was designed by key insights from the very customers that we're serving. So we first definitely started with research, trying to get insights from the customer segments. We looked at what is the opportunity for this customer segment. From a Zambia perspective, it's estimated there's between 1.2 and 1.5 million micro entrepreneurs in Zambia, and less than 1% of them actually have some form of insurance protection. So we definitely wanted to have those dynamics and those understandings in terms of what are the financial challenges, what are the daily challenges that they face, both in the personal capacity and in the business capacity. And with the very nature of the customer segment, it's very difficult to distinguish. It's a very, very thin line between personal risk and business risk, because that business owner is the risk. So it's very, very a thin line to do that. Yeah. So from the research, we did definitely then held a design sprint session where we wanted to quickly do a prototype, go back to the market, go speak to the customers. We looked at the top 5 risks that came out from the consumers. We looked at what sort of benefits can we offer these consumers, and what's the price point. And we went back and tested that until we came up to some form of benefit price relevance. And we knew in that whole process that that distribution was going to be very, very key in that aspect. We already started engaging with some of our distribution partners, or potential distribution partners, and we actually involved our distribution partners in the design sprint process, in the research process, that could totally understand exactly, how the product design. And we knew from the feedback that the use of mobile devices or technology was going to be key in terms of that. So from the outset, one of the InsurTech partner that we partnered with, Inclusivity Solutions, we're actually part of the whole process in understanding the challenges. So from that we designed a product that offers 4 basic benefits. The first benefit is a property assistance that really covers the business owner against natural perils, impact damage to the property, and by property this can be the actual structure or the stock. We did not differentiate between the two, because it's very, very difficult again to do that. So we did not differentiate between whether it's structure or stock. So it's effectively just property damage. In addition to that, we've offered loss of income or business interruption, commonly known in the market, in the event following physical damage. We were still not 200% happy with that solution, because what we've seen is, as the norm in the market is that business interruption must follow physical damage to structure. So now we actually already tried to think of how do we offer now business interruption without actually having a physical structure, and this is what COVID has actually done. It actually made us to rethink our approach in terms of how do we offer some form of compensation to the loss of income when there's no physical structure. So we're going back to the drawing board to see how we can solution that. The third benefit is the funeral assistance. I think it's a common phenomenon especially in the African market. That you try not to offer death assistance because death is sort of like a taboo thing. So you have to be very mindful very careful in terms of how you position that solution. So we've positioned it as an assistance, as a financial assistance in the event of a funeral, and this covers the business owner and the spouse. But one thing again, African dynamics are quite there may be challenges at times because you find that the business owner has got more than one spouse. So there's those cultural challenges as well that you have to address. The fourth benefit that we looked at was what's commonly known as hospital cash, and this offers a daily payout in the event of the business owner being hospitalized. in excess of 3 nights. So those were the basic four benefits that we took. We actually launched this, Greg, as you mentioned, 2 weeks ago. So those are the 4 benefits that we took, and the premium for the 4 benefits is around about $2, $2.50, around about there, with a maximum payout of about $2,000. So that's what we're looking at. And I think I mentioned earlier, with very low margins in micro and inclusive insurance, we know that the efficiency distribution has to be cost effective, and from our engagement with consumers, where the mobile uptake is far much greater, we knew that making use of mobile technology was definitely key, and that's one of the reasons that we definitely decided from the outset to partner with an insurtech to ensure that we can provide the solution at a very, very, very cost-effective manner.
Siani, I think we're all looking forward to hear more about how the product develops that you have on the market, and I think we will have many more discussions about business interruption, because this has been a point picked up in several sessions during this conference, and also, of course, in discussions we had in the Min Best Practice group and elsewhere. So I'm sure we'll discuss a lot more about that. Let me turn to Jeremy.
Sorry, Gregor, can I just ask a question of Siani quickly?
Go ahead.
Yeah, so, I mean, the point about business interruption is obviously critical. I think it also was a question in the chat now. And to me, it's not just around, the COVID-19's highlighted it, but increasingly businesses, or at least there's many businesses that are no longer primarily reliable on physical assets to run their businesses. And, some businesses still are heavily reliant on physical assets, but many businesses, physical assets is only a component. And in fact, IP or other types of assets are much more fundamental to their ongoing business. So I think that shift that you mentioned of how can we enable business interruption that's not linked to physical assets is critical. My question is, like, how are you guys thinking about, firstly, what are the challenges? Because I think also getting a reinsurance on that is quite challenging. And secondly, I think, and then also, like, what is your thinking in terms of linking the claims to? Because that's obviously one of the things that has limited the insurance industry in linking it to physical assets, I think.
Yeah, Gregor, you definitely, that's a valid point. And I'll start first by addressing the reinsurance component. And yeah, it is a challenge at the moment. And what we found is most of the reinsurance arrangements exclude pandemics. Even at the moment, so it's very, very difficult to try and access reinsurance support, especially for a new product where you don't know, you're going into the unknown, and it's a new customer segment. So obviously, we need to protect our balance sheet as insurers. So that partnership, that insurance value chain is very, very critical. But our thinking around some of the brainstorming sessions that we have, and our thinking around that is what we feel offer just maybe a 1 week or 2 week small benefit in the event of closure. In Zambia, we're quite fortunate that there was no full lockdown like we've seen in other countries. It was literally partial lockdown, but some businesses got affected, and the small business got impacted the most. So our thinking is why not just provide some form of maybe on a weekly basis. Obviously you have to cap our exposure in the event that businesses are forced to lock down by government, to offer some form of relief. Yes, there's no physical damage, and a layman does not understand, because from a layman's perspective, if I'm a business owner, my property is not damaged, but I've lost income. So it's how do we link that connection, in the absence of physical damage. Yeah. So it's not an easy solution. I think if there's actuaries on the call, actuaries, I'm sure they ask questions I had to say, how do we actually offer this benefit and how do you price it? And in the absence of data, I think Monirul probably mentioned this, or Gregor, in the absence of data to back it up, it makes it difficult. So it really calls for those innovative insurers, those insurers that really want to that are invested in this space, to take that, to take that leap to say, how can we venture into this? How can we invest into this space? And this is where it calls on, the key partnerships with donors. It really comes into play, because it's very, very difficult for insurers to do it on their own. But if you have strategic partnerships with institutions that are driving this agenda, it makes it a little bit easier. But it definitely it's not an overnight solution.
Thank you, Siani. Let me now just pick up a couple of questions from the question and answer section. Jeremy, putting you at spotlight first. So there have been actually several questions around the topic of informality. How does that actually influence how MSMEs can be served if they are informal? Siani already commented that they serve both, so they don't differentiate in that sense. But there's also the question, many MSMEs operate in the informal sector. How can insurers provide cost-friendly insurance products, keeping in mind the additional risks brought about by this informality? So Jeremy, do you have any thoughts on the whole topic of informality and ensuring MSMEs that may act in the informal space?
Yeah, so I mean, I think the question of informality is obviously a really important one and a really challenging one to navigate. So there's a couple of thoughts that I have on this without necessarily giving a comprehensive answer as such. But I think first is, and Siani and Monirul can probably speak to this better than me, but I mean, informal enterprises are often excluded because of a lack of documentation. So it's a lot harder to get access to formal financial services if you aren't formal. So there's that almost natural exclusion of informal enterprises, which I think is something to consider, but is a real challenge. But I think what is potentially beginning to change is, as we see increasing digitalization of economies, if you have a digital account and a digital identity, increasingly you can be found and you can be identified, even without being formal as such. So if you have an ability to make a payment through a digital channel and have a digital ID, suddenly, and a digital ID doesn't have to be the same as a physical national ID, just a way of identifying a unique entity, it suddenly creates new opportunities. And I think even linking to how we can design new types of products, like completely different types of product, for example, business interruption. If you have an enterprise that is operating entirely through digital channels, and you can have access to that data as an insurer, potentially that offers an opportunity to rethink how we actually design insurance products. I do think the other aspect I think that's important when we think about informal is that, so on the one hand, we've spoken already about there's quite different needs when you segment between SMEs, between micro or particularly nano enterprises, your really, really small enterprises that primarily have personal risks and probably primarily need personal type of covers, maybe with a bit of a business type top up, versus your larger enterprises that need more deliberate, tailored business type insurance products to meet their business needs. And sometimes that divide can be between formal and informal, but I don't think it's even as neat as that. So one of the ways that I think that is potentially possible to circumnavigate that or to sort of cut through that informal formal divide, maybe to consider working through specific value chains. So it's not a perfect solution, I don't think, but if you consider how value chains or value ecosystems interact with each other and how different enterprises interact with each other as providers to providers to providers, that may be one avenue through which you can you can reach a group of enterprises that are operating within the same value chain or within the same sector, regardless of whether they're formal or informal, as long as they're interacting with each other or aggregated in some kind of useful way, that may be a way in which you can reach those enterprises. I think certainly in terms of understanding the informal enterprises, though, that remains a massive challenge. I think collecting data on formal enterprises is hard enough as it is. Informal just further exacerbates that challenge. So I don't think that's a comprehensive answer, but some thoughts related to that issue.
But quite comprehensive thoughts, I think. Monirul, do you have any comments on the informality issue? How do you approach that from BRAC's perspective? After that, we'll switch to the next topic, actually.
Yeah. So in terms of informal sector, informal SMEs, we have a scheme for remittance and migrations. So they do not need to have a document for their shop because there is nothing like that. But we also target them, and we also offering them the finance, adequate finance for their need. But when we talk about informal, what challenge I see when we talk about insurance for them is whether there is a regulatory barrier to provide insurance to the informal sector. If there is, then we need to work together. The distribution partner and insurer can work together, reach out to the regulator, and showcase the opportunities for that sector. But for BRAC, in an MFIs, we offer both. And traditionally, we also have a trust is something that really matters to us. Trust from the supply side, trust from the demand side as well. If we know someone for a long time, if the credit history is very good, we are very open to offer flexibility in terms of documentation and others. Right. That's how we address the informal sectors within our within the tools we have so far.
Yeah, that's also what I think. Maybe insurers can learn something there from MFIs and other institutions that are on the forefront of that, because serving especially micro businesses in many countries, it's 99% of them are often informal, and if you want to make a business case out of that, being it as an institution providing funding or maybe being an insurer, you have to find other ways how to get the data and how to make sure that that in case of loan you get your money back, in case of insurance that you have a business case there. Let's get to our next emerging opportunity, which we called being a risk management partner rather than an insurance provider. Jeremy, let me put you here at Spotlight first. What differentiates a risk management partner from an insurance provider?
So I mean, I think there doesn't need to be a difference. I think an insurance provider can be a risk management partner. But in practice, I think we see most insurers are focused on selling insurance products. It is their core business. But I do think that for MSME provision to work, for us to actually be able to sell products effectively to MSMEs, it is critical that we shift that approach away from just asking what insurance products can I sell to this target market, to these SMEs, to rather shift the question around and say, what are the needs of this MSME and how can we help them to build resilience? So building resilience, I think, is a more holistic approach to managing risk than just insurance. Insurance is one way to build resilience, but there are many other facets that can contribute towards building resilience of MSMEs. So I think that there's a role that insurers can play of thinking of themselves as a partner to MSMEs rather than just a service provider. And so that can manifest, for example, in helping enterprises to do risk assessment, to understand their risks, to understand what type of risk management solutions there could be, as well as helping them to, or offering specific solutions that help them to manage their risk. So for example, technology centers make that increasingly possible. And I think there was a question in the chat, which I'm glad we got to, which is, I think this approach also adds a lot of tangibility to those insurance products. That you're selling someone, or you're selling an MSME rather, a risk management solution, which is about helping them to better understand and manage their risk rather than just selling them an insurance policy. And
well, and how could actually then a business model for an insurance provider look like, including these aspects of risk management more directly? if you want to put it bluntly, how can an insurance provider make money out of that?
Yeah, so I mean, is there a business case? I think that's really probably the billion-dollar question, because I think that this MSME target market is a massive untapped market. I think, you know, what data we do have illustrates how few MSMEs have insurance, but it also illustrates how large that group is across the developing world, and like have significant revenue, significant income. That it's not that they can't afford insurance, it's that they choose not to buy insurance because of the alternative solutions that they think offer them more value, as Siani articulated really well in an earlier question. So how can players actually tap into that? And I mean, I have to believe that there is a business case. I don't think there's that many demonstration cases, but I think that there are some emerging. And I think that over the last 5 to 10 years, there's some really important trends that make this increasingly feasible for insurers to make this shift. So the fact that technology is cheaper, the fact that data can be collected in significant amounts, and that it can be usefully analyzed, means that this type of approach, I think, is increasingly feasible for insurers. I mean, to give you an example, we found that in Ghana, road transporters, some MSMEs with like 25 to 50 of those large 18 or 24-wheeler trucks didn't see the value in buying comprehensive motor vehicle insurance. They bought third-party because it's compulsory, but they didn't see the value in comprehensive motor vehicle insurance because it didn't offer them that value. What they did want was an ability to be better at actually monitoring their primary risk, and their primary risk was the driver. How can they monitor how well the driver is driving, if the driver is drunk, if the driver is falling asleep at the wheel? What they needed was telematic solutions that can help them monitor their trucks as they're out on the road and make sure that nothing is going wrong. Act early when they identify a driver who's maybe just not good at driving and needs to go on advanced driving courses. Those type of solutions exist, and I think in emerging markets and certainly in the developed world, these are widespread as an insurance solution, where insurers offer, even retail motor vehicle insurance, offer telematics as standard because they see it as a valuable way of collecting information and data on the drivers and managing, so both enabling them to model, but also to manage or limit the risk of accidents happening by encouraging good driving behavior. There's reason, I mean, particularly in MSMEs, which actually need the solution and need fleet management solutions, why can't we be offering that to MSMEs in these developing countries as we already do in emerging markets? And as an example, there's UGI is a insurer in Malawi who's successfully done this. Malawi being one of the poorest or lowest income markets on the continent, in the world, in fact, and they've successfully pivoted their business model away from focusing on compulsory third party to comprehensive motor vehicle, which is bundled with telematic solutions for their clients, and have seen significant growth as a result of that. So the business model, I think, can work from taking this as thinking about this as a risk management solution. I think Parcel is another really good example. And Parcel, I'm sure, is something that many people on the call, on this webinar would have heard of. They're essentially a technology provider that develops sensors that monitor the atmospheric conditions within containers for goods in transit. And it was initially piloted with the cocoa value chain in Cote d'Ivoire, where they found that monitoring the atmospheric conditions and ensuring that refrigeration was continued throughout the value chain was able to reduce spoilage by 25%. That's a massive reduction. And they built on top of that, linked it to insurance policies for goods in transit, right? So it's linking the risk management with the insurance policy to provide a comprehensive risk management solution to those MSMEs in the value chain. And now they have partnered with a number of different partners to actually insure vaccines, which is a particularly topical issue at the current world. So these things are I think, are increasingly practical with sensors and other technology being increasingly affordable. But as coming back to that other point, it adds tangibility to the product that you're selling to an MSME. And I think that may be one way to unlock and illustrate to MSMEs the value of these type of solutions.
And I take out of that it also might reduce actually the risk for the insurers that the risk materializes, which kind of makes also a business case for the insurer.
Absolutely, yeah.
All right. Well, questions to Siani and Monirul. Siani, maybe you can go first. Is that what Jeremy has just explained to us? Is that something you are striving for at Hollard or Hollard Zambia, and vice versa at BRAC? Do you see the business case there?
Yeah, Gregor, I definitely share Jeremy's sentiments. I do believe there's a business case in serving this customer segment. And I think from a Hollard perspective, from a group perspective, we're fortunate enough that this is actually something that is also being driven from a shareholder level. Because our shareholders do believe that we need to be able to provide solutions for this customer segment that still remains vulnerable. But one thing that is critical and what is key is definitely have to take a long-term view. This is a customer segment that's not going to bring returns in a short period. So it's a balancing act. Obviously, shareholders are looking for returns on investment and return on capital. But at the same time, there's that social impact. So it's a double bottom line impact in terms of returns and social impact. I do believe that there is a business case in providing solutions for micro entrepreneurs for inclusive insurance. And what's surprising at times, what surprises me is that we still see few insurers that look at microinsurance or look at inclusive insurance as a CSR program. Definitely not a CSR program. There are business cases out there currently floating around where there is profitability in microinsurance, provided that it's done well, it's done properly. At Hollard, from a Hollard perspective, Hollard has been venturing in inclusive insurance for a very long time, especially in the South African market, and now we're looking at taking learnings and taking inclusive insurance into other markets. So for Hollard Zambia, it's been a learning journey. It's been a great journey, and this is the start of us really looking into the future in terms of how do we now penetrate more, how do we understand this our customer segment more, what do we need to invest, who are the partners, who are the key stakeholders that we need to partner with, because it's really about that value chain, that insurance value chain from a stakeholder perspective, and again just taking that long-term view. And I think at times as insurers we fall short because we're looking at it from a 1 to 2 year, and already we want to expect returns within 2 years. And we know inclusive insurance definitely it's a 3 to 5 year outlook minimum. If you're going to get into that, so definitely there is a business case in terms of going into inclusive insurance.
Thank you, Siani. Monirul, what's your perspective? Is there a business case?
Obviously, there is a business case. We are experiencing that sitting in the distribution partners and working as a distribution partner and partnering with a government regulated insurer. So as Siani said, definitely it's not a short-term goal. It shouldn't be. It should be a long-term goal, and automatically there are the opportunities, and definitely there is a business case. And the key challenges of that is from the insurer point of view, definitely they are looking for investment profit, but I would say that shouldn't be the target at day 2. It should be like day 5 and day 6, and we need to be open. We need to be very frugal, innovative at day 1, 2, and 3. And if we have the patience, if we want to explore, it can be a very small scale pilot in partnership with the distribution partner. And there are many opportunities out there. And so far we have discussed that. So, and those, we can address those needs. And if we think for the long-term solution, long-term partnership, long-term management, and what are the key information needed, what the data level improvement needed, what are the capacity level improvement required among the partners, among the stakeholders, I believe definitely there is a business case.
Okay, Monirul. So it's a land of opportunity, and I think we heard that in many discussions before. MSMEs are virtually an untapped market so far from insurers. So if you make models work, I think there's also a great business opportunity in that. Let's come to our last key consideration, which is the importance of aggregators and partners with aligned incentives. Siani, you are partnering with financial institutions to bring the insurance product we've been talking about for micro businesses to market. What is, well, mainly the main incentive for these financial institutions to partner with you?
Thanks, Gregor. Definitely, I think anybody that has spent some time in inclusive insurance will realize that, in my opinion, probably 60–70% of the biggest challenges in inclusive insurance is distribution, and this brings about the need for aggregation, the need for partnerships, and when we look at partners, we definitely have to look at it not just from a commercial perspective, but what is the strategic alignment? Because if the partner is mainly driven by commercial benefits, chances are that another insurer that's going to offer them a higher commission rate, that partner will automatically move because they're driven by commercials. So there has to be that strategic alignment first in terms of who you partner with. From a distribution perspective, definitely commercials are important. I mean, we're in the business of profitability, so commercials are important, but that should not be the only driving factor when looking at partners and aggregators. Obviously, we know with aggregators, aggregators give us numbers. With inclusive insurance, it's really about scale in terms of to make it sustainable and to make it profitable in the long term. So without aggregators, without the right type of aggregators, it makes it very difficult to scale the product. You may have a very good product, but if you can't distribute the product, if you can't get the products into the hands of the consumers that need it in a very cost-effective manner, that brings along its own challenges. We have seen aggregators playing a key role, from bridging that trust gap. As we mentioned earlier, there's a huge trust barrier between this customer segment and insurers, and often what we find is partnerships and aggregators can help bridge that gap, where aggregators are actually in the forefront in terms of addressing customer needs and challenges, and educating consumers about insurance solutions that are being provided. So definitely partnerships very key. Aggregators very key in the insurance value chain, in order to make it sustainable.
And I think we talked about some of the things you have in mind there before the session. So currently, I believe you mostly partner with financial institutions, but as you have mentioned, you also have some other plans in the drawer. Can you spill the beans a little bit more about what you are planning there?
Yeah, so I mean, for our product, what we wanted to do is, before we can even look at scaling, is to take the product first to market, to start getting some consumer insights and real customer experience, because you don't want to scale a product that's gonna give you challenges. So we've taken a phasing approach, one of piloting with. So we've partnered with one of the banking institutions that we work with in Zambia, and we want to partner for at least a period of 6 months. And then the phase 2 component we'll definitely look at is how do we scale the product, how do we improve the product, and how do we actually incentivize partners more than just commercial incentives. So it's a bit too early to mention at the moment, but it's definitely something that we're working on in terms of our phase 2 launch of the product.
All right, thank you, Siani. Last question to Jeremy before we actually come to our closing remarks. I'm trying to scan the quite a few questions here in the chat as well. I think many of them we kind of touched on, and to some of them you will actually find the answers in the learning note. But maybe we have a chance to pick up one or two more. But Jeremy, I think we gathered a couple of quite interesting case studies in the learning note. You have already touched on some of them. Which example maybe do you find most striking, especially when looking at partnership models?
Yeah, I mean, I think the point about partnerships for me is really about finding aggregators that have aligned incentives with the insurance providers or the provision of insurance. So they're incentivized to build the resilience of the enterprises. So for me, I think the most striking one is actually a traditional model, or not necessarily a new model, which is really about value chain, which is value chain aggregators or some version of that. So in the form of associations, where, and there's two reasons for that. First, it's a natural aggregation point for many MSMEs within a single value chain, that you can reach many MSMEs within a single value chain. So those MSMEs have a similar set of risks and a similar risk profile, and can be reached through a single point. So I think that's the first point. And the second, that there's aligned incentives. Associations have the best interests of their members at heart. They are incentivized to build the resilience of their members. Cooperatives, similar. You know, and I think we see, for example, the example that I often cite here is the Kenyan Tea Development Association, which has 600,000 smallholder farmers as members in Kenya. But because they're all aggregated through the single association, they are able to be reached with a range of different financial services. They have access to multiple types of tailored loan products. They have access to a number of insurance products. Britam in particular is their primary partner, I think. And you know, that creates a real opportunity to design tailored products and reach a subset of similar MSMEs. And I think the emerging theme there is the emergence of digital platforms, where digital platforms are increasingly playing that role as value chain aggregators. And we are seeing it as a changing trend across the world of shifting towards online engagement. So it does require, it's almost an adaptation of an existing model. And nature creates new risks, but it does create new opportunities as well.
Yeah. I think that actually circles back to the beginning of our session quite nicely when you talk about business associations, and that was in reference to one of the questions in the chat. The two key challenges the audience has identified was lack of knowledge on the side of the insurer about the target market and lack of knowledge of MSMEs about insurance. And I think business associations are also a very good door that you can use to actually have a platform to bring these actors together and to learn from each other. And we've been, as GIZ, have been engaged in some of these approaches, and I think business associations can play a major role there. So unfortunately, we are almost out of time, even though I realize there are quite some questions still unanswered in the Q&A. We'll try to pick that up later. But I don't want to end the session without some concluding remarks. And this is also how the learning note is structured. So of course, the learning note also has a conclusion. And we came up with some practical actions that key stakeholders could do to make insurance and risk management solutions for MSMEs work. And therefore, each one of you have the opportunity to comment on that, but not for your own, let's say, group of stakeholder you belong to, but for the other one. So Monirul, I want to start with you. Which action would you like development partners to take to help MSME managing their risks more effectively?
Well, first of all, conducting comprehensive research to really understand and identify the need, understand what are the product available in the market and what is the feedback of SMEs, and what they are really looking for, and forming partnership or in-house pilot to really test out the product, how they are actually working in reality. And another very important factor is the data level solution and digitization. Often we see the challenge in terms of data, the lack of data for right product design and development. And obviously, as a stakeholder for inclusive insurance, working with the insurance providers and talking on behalf of client to the regulators, and sharing the opportunities, sharing the barriers that need to be managed, that to be, the regulator can really help the insurance provider and the development partners in really catering the right insurance solution.
All right, thank you. Siani, pretty much the same question to you, but aimed at the regulators. Which action would you like regulators to take?
I think one of the barriers at the moment for inclusive insurance is outdated regulation, right? With all due respect to regulators, I hope there's no regulator on the line, but we definitely need regulators to create a more enabling environment from a regulation perspective. I mean, we've faced several regulation barriers at the moment in Zambia in terms of launching and distributing our products. For example, one of the barriers that we have is where we have an aggregator that is an agent of one insurer, that aggregator cannot partner with another insurer. So irrespective of whether that insurer is providing solutions for the customer segment, it makes it difficult for another insurer to partner with them. So it is such a regulation that creates those barriers. So my plea from a regulatory perspective is definitely to have a more enabling environment. We need to keep up to date in terms of advancing our regulatory constraints, and there definitely needs a closer partnerships between regulators and insurers and other stakeholders within the value chain, especially when it comes to inclusive insurance and the customers that we're trying to reach. Yes, there is a lot of regulation at the moment that is supporting inclusive insurance. I think for me, what I've seen, one of the challenges is the pace at which regulation keeps up. Because the risks are changing on a daily basis, and we can't have regulation that is not keeping up to date at a fast pace. So that would be my plea in terms of the barriers that we've come across from a regulatory perspective.
I think that was a very convincing plea, Siani. Jeremy, last but certainly not least, what actions, in your perspective, should insurance providers prioritize to help MSMEs to manage their risks more effectively?
Yeah, so I think, we've discussed the importance of segmentation, understanding customers, and the importance of incentivized partners are two critical ones. But the two that I would highlight, shifting the focus, as we've discussed, I think, a fair bit today, towards thinking about yourself as a risk management partner rather than just a provider of insurance policies. To me, at least in my mind, I think that's the only way we're going to really shift the paradigm with MSMEs and begin to change that level of mistrust and belief in insurance amongst MSMEs probably across the world, but particularly in the developing world. And then the second, I think, is one that's much more internal for insurance providers and is a really challenging one, which is making sure that you get buy-in at the board and exco level, because I think that is where so many of the challenges come in. Investing in a new target market, whether it's MSMEs or anything else, you're not going to make a return instantly. It requires an upfront investment. And when you're looking at short-term returns, when you're worried about your annual financial statements, it can be quite challenging to make that investment upfront. So I think getting that buy-in at the board and exco level is critical. And I think some of the things to consider there probably is around presenting clear projections around the lengthy investment period and what the size of the opportunity is. So make it clear upfront, sort of, not just what is required to invest upfront, but also what the size of the opportunity is and when you're likely to see that, so that they can so that there's informed decisions around what to expect from targeting this market. And then I think the other way to manage that risk is by partnering with other organizations that can help you to share that risk. And I think Siani's an expert in this, and Monirul as well, actually, around partnering with development partners who can take on some of that risk and may have the incentive to be able to cover some of the risk that you're taking, so that you don't have to take on the full risk yourself in developing or reaching into a brand new target market. Yeah, it can be a way of creating that incentive internally within insurance providers to reach this new target market.
Okay, so basically you touched on all the three stakeholders quite elegantly. That leaves me to thank foremost the audience for tuning in and for sharing quite a number of interesting questions. I hope we answered most of them. Thank you very much, of course, to Siani, Monirul, and Jeremy. And I pass on the word to Dirk.
Thank you, Gregor. Thank you to the panelists for this great session. Siani, I'm not really sure about the regulators. There was ICII in the call and others, so we probably need to discuss that further, but regulation certainly is an important topic. So thank you again for this very interesting session. Small and medium enterprises are probably clients that haven't been looked after really well, and so I was really happy to see that session. So thanks for the preparations, and I would like to invite all of you to the session after lunch, which will discuss different distribution model approaches, high touch versus low touch. The session starts at 2 p.m. Berlin, Munich, Paris time, and I hope to see all of you there again. Thank you.